Everyone see my screen? Alright, good. Alright, so today we're going to talk about Forex box trading. It's a style that I use, which is a derivative from stair-step breakdown. So I don't want to talk about that whole methodology, but basically you're going to learn how to look at things as if it was a stair-step. Stair-step up or stair-step down. So we're just going to apply some of that simple methodology. It's fairly simple. It's based on a trader back in the 50s, professional dancer, and he made over $2 million in this back in the 50s, just using kind of a similar technique, and so it works pretty good. And I'm using it for my forex trading. It gives me a better signal when I use it on a higher time frame. As with anything, the higher up on the time frame you are, the better signal you have. The shorter time frame you have, like a minute, the more noise you have. So we're going to touch a little bit of that as well. Some of you guys have seen my videos before, and I talk about it there as well. But you can use this box trading all the way down to 1 minute if you want to. You just have to be a little bit extra careful. I do recommend that if you're going to use this, that you do use a demo account and try it out there first, and make sure you kind of get the methodology or philosophy of it. But it's a pretty good way of trading. It's not the only way I use it, together with trend lines and support and resistance. What you all see right now is my screen. This is how I trade. I do not use any indicators. However, most of you guys know Miguel. I think all of you do. And I have loaded his template, so I do check it out, but I don't use it that much. But it's always nice to look at it. It's kind of what I see here. For me, it's a boiling band kind of thing. So I have something similar that I can use that's kind of work the same way. It's boiling bands, and what you do with boiling bands is just buy one and max out the boiling band, top or bottom. You go the opposite way, but that's another live event, so don't want to confuse anyone. Okay, so naked trading, that's all based on price action. What I do is I study candles. I look at the candles. The candles tells me a lot, and I know kind of where the trade is going to go. What I use to secure my trades are basically a box methodology, and I draw a box. So first what I do, and here's how I trade daily. I first establish, and people that have seen me before know that I first establish the trend, and we know that in this case the trend is obviously down. So that's your first thing. So knowing that the trend is down, now you know that if you only trade with the trend, you're going to have more profit than you will if you trade on counter trends. Counter trends being this: it's when you have a correction, and when the correction breaks through your counter trend line, then you take your next trade with the trend. But you can also trade on the correction, but to do that you need to start involving Fibonacci's, and some of you guys know that I can use that too. And we have a 61.8 retracement here. Perfect. Came up here, which is what we would have expected. There's a different methodology of how you trade on with fib. You set your trade stops at the different fib levels, and you wait for it to come up here, and when it bounces, all your trades start kicking in, and you take the ride all the way down. So again, not a seminar, but just giving you a quick debrief about that. So that's the basic. Establish the trend, and if you want to be really successful, only take trades that is in the direction of the trend, meaning we have a downtrend. So the trades that we would take to be absolutely best off would be short trades, meaning sell trades. And because there's more strength in those trades because the trend is going down, so you trade with the trend. The trend is your friend. If you haven't heard that, learn that, repeat it. That is how you kind of enter the market. Trade with the trend. Now when I say this, it's very important, and I mean this literally. It is when the trade isn't there, don't take the trade just because you want to take a trade. And for everyone that is new in Forex, that is going to be extremely hard because this is really, really addictive. And what you want to do is take a trade just to see some money start flowing. That's also how you see your money flowing the wrong way. So make sure you take the right trade. In this case here, we're on daily time frame. We have a bounce here on this trend line. We see large wicks. That's the top of the candle here. So the indication there's two indecision candles here. So right now we could go in and take a short position and pretty much expect it to be what the previous wave was, 364 pips. If we take half of that, because that's where we had a correction, we take 237 pips. So if I took a trade right now, I would set my take profit to about 150, 180 pips. But that means I'm trading with the trend if I take a short. Now, before we go anywhere else, I just want to stop here for a second, make sure I'm not talking too fast and I haven't lost anyone. So I'm going to open it up for a minute or two here for questions or making sure that everyone understands what I said so far. Everyone with me? Now you can text because you're all muted, so you could just text out the answer if you all hear me and if you understand what I've said so far. Please type in your answer. Alright, Carlos, you say so far so good. Good. Fernando, Don, good. So you're all with me. That's good. I haven't lost you yet. Don't hesitate to speak up if you're not following me. This is meant for everyone to understand. So I want to make sure before I continue that everyone understands. And remember, there are no stupid questions, just stupid answers. So, any good questions that I can give a stupid answer to? Alright, so I'm going to assume everyone's okay. If, again, don't feel like you can't speak up if you're not feeling. Scott, I'm sitting on a 45 megabit pipe in my place, so that could be one reason why my shorts are not lagging. I'm also trading with my broker in Finland. I'm in US, but I have my account in Finland, so they have my broker has a good infrastructure, and it's also the one that I use for my copy traders and PAMM account, which we're going to talk about a little bit at the end of this meeting. So you only see a few of my charts. It's not that few, but they keep going. As you see here, you scroll out, you see I've got quite a few short. So It's not lagging, so I got a pretty good connection, but yeah, Scott, one thing you need to know though, your chart's gonna start lagging the more indicators you put on, because they're tools to gather the data, compute the data, and then present the data to you. So the more tools or more indicators you put on, the worse it's gonna get. So if I start throwing on everything I can in here, there's a chance that my stuff could lag, but I used to use a lot of different indicators when I started years back, but one thing you got to know with indicators is I do apologize. Indicators are in the past, meaning that the data when it's presented to you has already happened. So they're lagging with their information. So by the time the indicator tells you to take a sell position or buy position, it has actually already happened. By the time this indicator, and most of you know about the repaint and repaint issues and stuff like that, but when this arrow here indicates oversold, that moment has already happened. It actually started happening on this candle here, and the reason you can see that is because you have this candle. It's a pretty strong candle, but you have a wick that's starting to develop. That meaning that volumes are tapering down, and then you have an indecision. So that's kind of like a pause in the market, saying, okay, we don't really know where we're going. You had a reversal candle, what we call an inverted hammer, and then you had three white soldiers basically coming down here, and you start seeing the wick turning, going the other way, kind of pushing and pushing, and then you have a reversal. And so if you would have paid attention, you would have start looking at either going short here or starting to look for the reversal candle, which this is kind of a reversal candle, but not the best one there is. There are better candles out here. This, what you have here, is a perfect setup. So right here at the bottom, you want to start hitting in basically with these wicks. The longer the wicks, the less power that momentum has, meaning there's something that's about to change. So, but by the time the indicator shows you that, it's actually already happened. So sometimes you can't get in at the most pivotal point, and you can't get out at the most pivotal points. But indicators are good. They're always much better at a higher time frame, though. So just remember that. I'm not saying don't use the indicators. The ones that Miguel has provided are really good, and you can trade with them and use them, and I would recommend you do, but always know that you get the information not at the moment when it happens. You get it slightly after. So more indicators means a slower system, slower charge. So anyway, not a problem, Scott. So anyway, let's get started. So we're at D1. We know we're in downtrend. And what I usually do is I establish the trend. I now know it's down. I've seen there's some correction going on, but I see indecision candles. I'm starting walking down on a time frame. Let me see what the question is. Eddie, sure, I can talk about how far to take a trade, and we can try to here on a daily chart identify a position. It's easy to talk about the past. You know, I would have gone in here because this, you know, right now there's not a really good entry here, but for the sake of the example, if I would have entered here, and I'm just going to draw a box, because if I would have traded on D1, my box would have looked just about like this. and right about there. So I would have entered not on this candle that broke out of the box, not on the next blue candle, not on this one. However, I would have entered on this little candle here, and we're going to zoom in on that. And I would have entered on this candle. I'm going to put a line right through it. Now let me put a little indicator here. That candle there, I hope everyone can see it. It does qualify as a pin bar. It's not the strongest pin bar, but it's a good enough signal for me to say, okay, I'm outside the box. I broke out of the box here. I went back in. I broke out again. I'm outside the box. I'm getting a pin bar outside the box. I'm in. So I would have been in on this second candle here, right there at the opening of that. I would put a sell stop right there. Now with a trade, in my stop loss, when I use the box methodology, is always above the box, and usually it is, depending on your time frame, but nothing less than 10 pips. You see you're on D1, you can barely sneeze and you're doing 10 pips. So in this case, because you're trading on D1, you should expect to make 100 pips on your trade, at least. So in this case, I'm looking at 35 to 45 pips. So I would set my stop loss right around here. So I'm just going to wing it right now. But what you can do is, you see the previous peak here, which is above the box. This candle here, there's a peak there. Put it slightly above that peak. That's your stop loss. Right? We'll put the stop loss here. That's our stop loss, right on that line. Now I would have let this trade go, and you saw my entry here, so we put a text there. And I'm explaining exactly how I would have entered. So this is, even though I'm using the past, this is really how I would have entered. So that's a pin bar candle to me. So I would have entered on this line, on this candle here, and you see that you had a spike here. And on the daily one, when you start going down on time frame, this little spike that we have here, it's a stop hunt. It means they're trying to find your stop loss that you've set and trying to blow it out. And in this case, we would have been just fine. We would have been just fine when they tried to do that move. And if you want to see how this candle really looks like, let's take a look. This D1 let's see. I'm gonna go back here. I'm gonna turn off this. This is the D1. Here you see this hunt. It's an insane stop loss hunt. It's 109 pips. It's made only to blow out your stop losses for people like me. It's just that they didn't set it high enough. When you go down to 1 hour, it looks even worse. So we entered. Now we can't really tell where it's at here. Oops. There we are. So you see here, you see a wick here. That's your first indication. Things are about to change. Then you see this huge push. They're really trying to get a lot of people to go long on this wick here. That's the whole purpose, and it's a stop loss purpose also. So this wick here, guess how many people just went in on that and they saw it just run right up, and they're like, I'm going long, long, long. I'm going all the way up, and people bought all the way in the top just to go the other way. Okay? So when you start seeing wicks, that's your first indication something's about to come. So that's how I kind of predict, okay, now I got to start looking closer at my chart because I'm about to get out or something is about to change. But again, we're back on D1. So We entered here, we're going down here. I don't see huge wicks down here, so there's nothing that indicates that. There's nothing down here that tells me, oh, okay, we're exhausted. No, we're not, because we have a very small wick, which means we have a lot of power. So this move here, indecision candle, we know it's going to go the other way. It's a correction. It's building up a volume. So for every long position, there got to be a counter position, right? So they're building up volume here, up to here, blowing out your stops, getting people to go long on this candle. Now they got enough to go the other way. So if you entered at the top of this candle, boy, you're in for a hurt. 508 pips. And you thought you were going to go long. A lot of people go this way. And instead they went the other way. And your first indications here are this candle wick here. Things are changing. You know, first off, you get a bear candle. You see that the bulls were trying to go the other way. Now, if no one knows about bulls and bears, so bears is going down, bulls are going up. Up is buying, that's bulls. Bears are down. So that's your first indication. A wick starting to form there. So they're starting to run out of juice. We go down here. What happens on this candle is a lot of people are getting in here and they say, oh my god, the market's turning, so I'm going to go short. That's what everyone wanted. They're still building. This is a volume phase. They're building volume here. And then it changes again. And then you see this little candle. It looks very familiar to that little candle there. They start building, continue building, but pay attention to this little wick here, right there. They're still trying to be stronger, but they're not. You see, you have a bull candle here with a wick, and then you have a reversal candle, a bear candle, that doesn't have that much wick. That's your first indication that the strength is running out of the bull, and the bear is starting to pick up strength, meaning they're almost done building up the volume that they need in order to continue down with a trend. Your final signal is this huge candle with a long wick. Now you really got to start paying attention, right? If you were going long here, you need to start thinking about your options. You need to get out. Then you have this red candle here. That's what we call a hanging man. The trend is up on this candle. You get a hanging man, which is a bear candle. That's a trend change. So we're going to continue going down. So that's what I'm kind of paying attention to. That's how I define where I should get in and out. If I entered on this candle, I haven't seen anything yet to indicate to me to get out if I entered there. I don't see any big wicks here. I see a big wick here, but that's just indicating to me that the little uptick that we have from the bulls is about to run out. Now look at that candle. It's the reversal of that candle, right? So again, big wick, and these two are indecision candles. You can bet your bottom dollar that this thing is going to continue down. There's no reason if you entered here for you to get out yet. Let's see how we would have been doing if we were here. We would right now be at 320 pips. Sounds great. So one of the biggest thing is that I want people to understand is it's great when you say, oh, I made 300 pips yesterday. Great. How much was it worth? If it was only 10 cents a pip, that's great. If you're starting out with $100 or $30 or $50, that's great. That's really, really phenomenal. But if you sit on 10,000 or 100,000, 300 pips at 10 cents, it's not that impressive. Try to do 10 pips or 20 pips with 10 lots. Now that gets a little bit more interesting. So it's the proportion of your lot size versus your equity. You know, you don't have to take 300 pips. You don't have to make this kind of a trade. You know, at the bottom here you were 465 pips. That's great. But I can guarantee you, if I threw 10 lots in here, I wouldn't set and wait it to here. I would have waited to down here. I'd taken maybe at best 272 pips at 10 lots. 10 lots. That's that's a fair amount of money. I have a fair amount of people that I know that just trades between 8 and 10 Eastern Time US, and all they do is about 20 to 25 pips a day, but they trade 10 to 20 lots per trade. So they make one trade and take 8 pips and then make another trade. They might do 5, 6 trades in the whole day. After 10 a.m. they're done. They made more money than most people make in a half a year in one day. So not saying that you should all go out get crazy about this and put $100 in and make a one lot trade, because first off you would get margin call, but secondly it wouldn't be a smart trading. So let's talk about risk. $3,000. Your risk at any time should not exceed, in my book, should not exceed between 3 to 5% max. That means that when all of your trades go the wrong way, if they all went wrong way at the same time, it would only risk 3% of your total really equity. You can handle that because you can recoup 3% in one day. You can recoup 3% in 1 hour. I see people that do up to 90% DD, what we call DD, which is a drawdown. Drawdown is your profit, and when we call it drawdown, it means profit is negative, so you're drawing down from your equity. So I wouldn't, in my book, don't risk more than 3 to 5%. Now, if you have $3,000, what kind of trade size could you take? Well, you do a 0-10. Let me open up just so everyone can see, just so it's nice and clear. Font, make it big. Alright. For every $1,000, you can take 0-10 lot size. That means if you have $1,000, you can take one trade that's 0.10, meaning every pip is $1. Alright, so if you have $1,000, you know that 1% is $10. So the max you can go, that you want to go, is risk 3 to 5% equals $30 to $50, right? If your trade goes against you, took one trade, it's 0.10 in size, your stop loss is equal to 30 to 50 pips. Everyone following me? Okay. Any questions? Okay. Okay, Fernando, ask away. You have a question, Fernando? Okay, good. So you follow me. So, okay. So does that mean that that's all you can do? No, because if you follow this rule, you'll do just fine. If you have $1,000, you now know that the max size that you can take, or should take, this is how I trade, you should not take one trade that is bigger than 0.10. However, you can take 10 trades that are equal to 0.01. That is equal to 0.10. Right? Everyone follow me? You can't, if you have $1,000, you can't exceed the combined lot size of 0.10. The risk is, So the risk on that, if you have 10 trades at 0.01, each trade, you have combined, you have to risk 10%. So on a 0.01, if you only took one, let's make it simple. If you only took one trade times 0.01, your stop loss is equal to 300 to 500 pips, 3 to 5%. Right? So that gives you the ability to take large swings. So this goes out to anyone trying to trade on gold. Because in gold, you have huge swings. They can blow your account in no time. Look at these swings, right? So if you trade gold, some brokers, however, won't let you trade 0.01. Some brokers require you to take a 0.10 trade. Well, now you know, if you follow this rule, that you can only have between 30 and 50 pips in stop loss. On gold, you better be sure of your trade, because in gold, when you have a hiccup, it's going to be 80 to 90 pips of a swing. So if you don't have the cash, don't trade the gold. It's very, very risky. However, there is a way to trade it, and I will show that on another seminar. But you can trade gold if you only follow one simple rule, and I'll do that on another session. But I just want to get back to this. How do you manage risk? If you have $1,000, you can take 10 trades times 0.01 size. That equals a combined 0.10. If you take one trade, it's 300 to 500 pips. If you take 10 trades, it's the same. The combined losses of all 10 trades cannot exceed $30 to $50, right? Play with it again. $1,000, you can take 2 0.05 sizes. That equals 0.10. Pretty clear, right? So if I have $3,000, my biggest combined trade size should be 0.30. So for every $1,000, you jump 0.10. So if you have 3,000, you do maximum amount of trades open cannot exceed 0.30. So I can have 30 trades at 0.01, and my stop loss can't exceed just the 3 to 5%, right? So at 3%, that's $90. 3 to 5%. So you figure that out. Everyone with me? Good. If you just follow this rule, you won't blow your account. You can manage losses. And if you take 10 trades, every third or fourth trade that you take will be a victory for you. However, one thing you need to remember, because you trade and you get upset when the trade doesn't go your way, my rule, no one has to follow this rule, but my rule is if I take 3 consecutive bad trades, I don't take any more trades that day. Because if I do, they are going to be revenge trades. Meaning I am going to take a trade just for the heck of it, because I'm going to show the market that I can turn it around. I'm going to consistently take the wrong trades, because I'm an idiot at that point, and I just shouldn't be taking a trade. So You take 3 trades that goes against you pretty quick. Don't take any more trades that day. I know it's going to be hard, really, really, really hard, but don't take it. You're not going to do yourself any favors. You can try to take trades to revenge your previous trades, and guess what? You're going to blow your account. You're going to lose more money that day, and at the end of the night you have holes in your drywall, your wife has left you, and you're sitting in the car, and all that good jazz. So just a rule, you can trade however you want to. So just trying to throw some humor in there. I'm kind of tired, but anyway. Alright, so I think we're pretty good with the stop loss and money management. So that is basic money management, right? And the other thing you got to remember, and I say this to everyone that knows me, when the trade isn't there but you feel like taking the trade, put both of your hands underneath your bum cheeks and sit on them. So you can take the trade, unless you can figure out how to trade with your nose. Just don't take the trade. Sit on your hands, and I mean that literally. Sometimes you really have to do that, because it's really, really addictive. This stuff is so addictive. It's just easy to get caught into it and just take a trade because I got it right this time. I had it wrong 100 times before. This time is the right time. Just don't take it if you don't see the signal. And I tell you what, when you sit and do box trading, it can get really, really boring, because the market around 5 p.m. Eastern to 7 p.m. Eastern, it just gets absolutely boring. Also at noontime Eastern, because London will be really, really active about 15 minutes before 12 o'clock Eastern p.m., which is lunchtime for us Americans here in Florida, New York, and all that stuff. London gets really, really active. They're trying to exit out the trade, close out the day, and leave and go to the pub and have a really, really good evening. Then it gets really, really boring until about 2 o'clock, and then it picks up to 4 o'clock, and then it starts tapering off, and that's the last rush right before 5 o'clock. Then it's absolutely boring until Asia starts up. Asian market, don't trade Asian market until around 8:30 to 11 o'clock. It's pretty fun. And it's pretty easy to make profit trades on the Asian market. And Asian market usually sets how the rest of the day is going to look when we wake up. This box that I'm drawing here is Asian market. And let's see, when is it that? That's 5. So that when you look at the Asian market, they usually set, the trend for the market. And usually what happens with the Asian market, here we see that the market's going to go down, and it's going to come back up where we started. It's going to go down. This is typical, and then you have what they said in the beginning, a down market. So it's hard to read the Asian market on the daily chart, but this here, these candles here are really Asian market. So still says go down, so continue. Small things like that. Don't try to figure it out right now. I'll have live session about that as well, but just wetting your noodle a little bit. Alright, so back to box trading. What I said is that can get really, really boring when the market's slow and everything is trading inside of the box, and that's when you don't do anything. So let's get going, because I've already babbled for like almost an hour. Let's see, Dombey, what's your thing? 1 lot equals $10. Yep, 10 lots equals $100. You got it. So if you take 10 lots and you make 10 pips, which you can make in 1 minute, you just made $1,000. So it's pretty fun. So hence, if you do Let's say you do 12 pips per trade and you take 5 trades. You had a pretty good day. Okay, so let me clean up this chart. Exactly, Scott. It could be really fun. So here's a good indication. We're now on H4, which is 4-hour time chart. Each candle is 4 hours. What we see here is a lot of up and down. These are places where a lot of beginners gets caught up. This is basically a stop hunt. When you switch down here, you see all these moves. People are going long, they're going short, they're going long, and the big guys that has a little cash in their pocket, meaning money, market movers, they're trading $1 million and up. They can pretty much move the market. So they can blow out stop loss that way, they blow out that way. So when you're in here, and if you're trading on 4 hours, this would be an area where you would not take any trades. You can make this box here, and maybe some of you guys are catching on to what I'm doing on stair-step breakout. We're looking for wicks. So these are wicks. These are indecisions. Like there's a huge push up, there's a huge push down, and you draw a box. You can draw a box around these two ranges, and then just let the stuff sit here until it gets outside of the box. You don't need this swing trading here. You don't need this volume up and down in order to qualify a box. If we want to qualify a box on 4 hours, this seems to be a pretty good box. So let's look at the size. It's 96 pips. So a lot of movement, right? But on a 4-hour time chart, it's an area where it kind of just goes up and down, and you shouldn't be trading here because you can blow yourself out. Let's move this box now when we defined it. Let's move it and see how it pans out. Let's take another big candle there. We have, remember what I said, where you put the stop loss above the box, right? A few pips above the box. So if we would have put the stop loss here, we could have put the box here and defined the stop loss here, and then we're just waiting for a breakout with a confirmation candle. Okay, let's zoom in here. Let's see, let's find a little box. Didn't think it was that far back. There we are. Here's our box. So this candle here is your breakout candle. Good, we broke out of a box. It's an indication of where the trade may go. And here's the biggest problem for a lot of people. They would enter on that candle and they would come in here at the bottom just to see the trade going the opposite way, 73 pips. They get scared, they get out, and they take the loss. So breakout candle, okay, good. We kind of get an indication where this might go. We're going to wait for a confirmation candle. Okay, this candle went right back into the box. Okay, good. Here, for me, this candle here, while it's not a perfect pin bar, it is a pin bar indication right there. This candle is a pin bar indication. I'm now starting to feel a lot better about a down move. So I could, if I wanted to, I could use this previous breakout candle and set a sell stop below it. So I would set a sell stop at 20 pips below it. So when the next candle breaks out and gets below the previous low, my trade gets executed. So it would have been here. Let's just play with it. 20 pips roughly right here. I'm roughing it a little bit, but it's about there. So that broke out. Next candle was not a confirmation candle, so you would not take the trade. You get a couple of bear candles. We don't care. Trade goes back into the box. We get a new breakout. Okay. Here's your confirmation candle. Now you can enter, but you should enter at the close of this candle. And where's that? Right at my 20 pips. Right? 18.5 pips. Perfect. We enter here on that line. Our stop loss is above the box. We go down. We're 88 pips. We could take that 88 pips and call it a day and be happy. And the market goes up. Doesn't touch our stop loss. We're good. Then the market takes another giant leap down. We're still in the trade. We're now 243 pips roughly. Here is my signal of I might get out soon. Wicks, right? They're trying to push down. The candle is still closing as a bear candle, so you can still sit on it. You wait for it. Wait for it. Now this candle here, while it's not a perfect pin bar, it's an indication that the trend might change. This might be a major major support. Somewhere around here, I would have probably taken my profit. Then it goes up and then it goes down again, right? But 243 pips, that's not shabby. Alright, so that's your box theory on 4 hours. The other indication of a box theory is what we call stair-step breakout. Think about that word for a second. Stair-step breakout. Just think about stairs. See what I'm doing? Top, next top, next top. It's a step down, step down, step down. Boom, breakout. It could be a step up, step up, step up, breakout. Hence the word stair-step breakout. I know this sounds really simple, and it is. No surprises, it really is. Just build your box. If you trade on 4 hours, take a moment like this on the chart, make your box, use that as your trading box. Move this box around, see what happens. Remember, make it long so you can see what happens. You can use this for historical data. You can see if you are in an area that has previously been a consolidation area. Comes in, it stays around this, goes out, comes back in. So this area, you can call that a big support or resistance area, whatever you want to call it. It comes into this, it breaks out of it. It comes back into it, it's going to break out of it. Comes into it, breaks out. Not difficult. You can use this to see what's happened in the past and areas that you should pay attention to in the future. Consolidation zone. Some of you guys know I use CZ for consolidation zone. Here, if I trade on 4 hours, I wouldn't take a trade. I would just wait to see what's happening. Breakout, confirmation candle. I'm going short here. It's okay, it went back into the box, that's fine. It hasn't taken my stop loss, that would have been up here. I'm fine. Take the trade on this confirmation candle. I'm riding all the way down, 336 pips. Good. So that's really the box methodology. As you switch it down, you got to adjust your box, right? We're talking about roughly 96 pips here. You can't trade it. You can't have a box for 96 pips on 5 minutes. That's insane. Just switch it down. Start looking at patterns. Gotta look at patterns. Let's get down to 15 minutes because I know some of you guys are trading binary. I do too, for fun. Let's try to identify box here. So initially I'm looking for wicks. I know on 15 minutes my box should not be bigger, taller than roughly 20 pips. I'm going to take this area here. I'm going to see how big is this. 24 pips. Okay, so this 4 pips higher than I want it, but I'm going to move it around to see if this box kind of gives me a good signal. Good. Bottom, higher bottom, higher bottom. Boom, breakout. Your stop loss on this trade would have been 10 pips below, which is roughly here. You see that stop hunt trying to blow up stop losses? You would have been just fine. You see these wicks? That's your exit signal. Will this continue that way? Could, but when you start looking at the bigger picture here, try to remember, or try to get this into your vision. Remember stair step breakout, right? Remember how I indicated stair step? 1 step, 2 step, 3 step, 4 step. This ain't looking like it's going to break up. It looks like it's going to break out down. This picture here, if you paint this breakout box here, it's going to sit pretty well on an hour, 4 hours, right? When it breaks outside this box, take the trade if you have a confirmation candle. But if you want to trade on 15 minutes, get the box down to roughly 20, 24 pips. You'll see it. You'll see where it kind of fits. You don't want to make the box smaller just to get in sooner on a trade. You want to make sure you don't get burned. Here's 30 pips. This might be too big. It's never going to be too big. It's just that you're going to wait. But when something breaks out of this box, that signal is much, much stronger. The bigger you make the box, the more secure the trade is. Right? Breakout, next trade, 24 pips. That's absolutely fine. 24 pips at 0.10, that's just fine. Let's get down to 5 minutes. I'm looking at this area. What you want to see and what you want to look for is an area where the price seems to just move up and down, up and down. No big moves. It just kind of hangs around. See this area? It just hangs around. It moves up and down. It's inside of, you see the wicks. You can include the wicks in the box if you want to. Remember, when it breaks out, the candle's got to break out, not the wick. I don't really care about the wick. It's just stop hunts. It's up and down, up and down. It's inside of the box. I see the step again. Step, step, step. Indicates a breakout north, up, bull. Right? Broke out, confirmation candle, get in. Take it. Again, 10 pip stop loss. Can't even get 10 pips on the screen. I'll go F11. Have to size it down a little bit. 10 pips stop loss. Right there. That's where my stop loss would have been on this long entry. See that stop hunt here? It's just a stop hunt. It's trying to blow out your stop losses. If you were to set your stop loss at 10 pips, somewhere around here. Oops. Right there. You would have been fine. You've gone down. Seems like a pretty good area, right? Things come down into this box. Guess where this is going? Into the box. Anyway, would have gone into the box and got up here. You start getting these high wicks. You get out. 1 minute. Let's see what we can see. I'll fix my chart. A lot of noise, obviously. Let's find a consolidation. Make a box. Figure out how big the box needs to be. That looks like a good box right there. How big is it? This one is 2 pips. 2 pips of a box. Is that good on 1 minute? Well, let's test it. Breakout, confirmation candle, right? 3 pips. When you trade like that, you see this number here? That's my spread. It's 0.7. I can take those trades because when you take a trade, if I enter a trade here and I have a spread of 0.7, that means I'm 0.7 negative already. So in order for me to make 1 pip profit, I need it to move 1.7 pips for me to make 1 pip in profit. This box here, 2 pips, I'm going to tell you right off the bat, it's too small. 5 pips is 5 to 4 pips is really, don't make it smaller than that. You can, of course you can, but you'll get whiplashed quite a lot. Right, see, went up, one came down. Let's see how big this box is. 3.8. That's okay. If we would have made it 2 pips, we would have gotten our, pardon the language, our ass handed to us. 2 pips, and we would have set it here. Breakout. We would have gone in here just to see it go that way. Do yourself a favor. Set a rule. 4 pips on 1 minute. Use that. Right now, there's no wick on this one, so it's not really a good area. And if I hold it backwards, looking at it, it's not really a consolidation area. Its consolidation area is actually a little higher up. I hope everyone sees that. You see what's happening here? Price is moving inside of this box. Gotta make it. Price is moving inside of this box. We'll just sit and wait for something to happen. We have a breakout. We've got a confirmation candle. We can go into it, take a few 3.5 pips. You gotta pay attention to your spread because late at night this spread will just all of a sudden become 3-4 pips. So be careful. Look for big wicks. This is a consolidation area on 1 minute. It's not the best because you don't have large wicks in here. The bigger the wicks and the more the consolidation you have, the better of an area it is for trading. Right here. Big wicks. It means the strength is falling out of that move. It's going up. It's coming down out, broke out, no confirmation candle, indecision, went back into the box, broke out, confirmation candle, go short. Right there we go short. Remember, stop loss. 5 pips. Right here. Roughly around here. You gone short here. You would have been fine when it went back into the box, topped out at the box, and continued down. We still would be in this trade. So right now we would be 4.8, right? And now you all see that that area where I put the box first, it's not a good area, right? There's no wicks. It just means that the move is continuing. So is this a good trade? We would have to look at the candles to see if it's a good trade, really. This is more, it's not about how to read the candles right now. It's more about using this box. So if you all started, use this box to start trading Forex. Once you've done that for a little while, if everyone's paying attention right now, you see the bottom here, and you see how the price came back into this box. You see where the top should really be? It should really be there. Right, so now we have defined our trading box for 1 minute. Say it's 4.7 pips, right? 4.6. This is now your trading box. Use this next time you see a wick develop, put it at the wick. Let's turn off automatic updating. Use this. That's a railroad. We probably wouldn't have been in there. We would have waited for nothing to happen. What we call nothing to happen is right here. consolidation, right? Goes up, comes back in. This is an area of consolidation. This is where you would want to sit. You wait for a breakout, you put your stop loss. You would be fine all the way down here. You would have taken the trade around here. Now we're 11 pips. Everyone following me so far? See this area here? The price will return to the box. The more consolidation you see happening in this box means that the price will always come into this box at one time. It has been here back then, and then it's 24 minutes from here to here. Actually, it's 248 minutes. Sorry, 248 minutes from here to here. So that means it went in here, came in here, 222 minutes when it came back in. Chances are it might come back in there. Let's go out and look at the bigger time frame. You have to perform this. Expand this box and see what happens in this area. Now we're trading on 15 minutes. Remember, 15 minutes, we need preferably 20 pips, not more than 20 pips. Let's see if this should be 20 pips. Is everyone paying attention to what I'm showing here? You all see what's happening here? Oops. Right there, we're at almost 20 pips. Does everyone see what's in there? Consolidation. When it's in here, just wait. Something's about to happen. Don't take any trades inside of this box. Wait for a breakout. That's really box trading. It's simple. It's so simple it's hard to understand. And that's everything I got for you guys. An hour and 19, no, actually an hour and 4 minutes. Alright, so I'm going to leave it open for questions. Sarah, sure I can. So to select your box, let's clean this chart up. Right now we're going to make this a clean chart. And let's say you open up a chart. We've all seen this chart, so we're not going to cheat. We're not going to use this because we know what this box should be. Let's use another chart. Let's use GBP USD. Switch to 15 minutes. Let's clean it up. Where right now, if you look at this, where do you think I'm going to draw the box? I'm going to give you a second to think about it. I need to figure out how big is the box going to be. I need to figure out an area where nothing is happening, basically. When I say nothing is happening, it means the price is moving up and down inside of a box or a range. You can call it a range if you want to. Exactly, the consolidation. Right, so here's an area of consolidation. Here's an area of consolidation. Now when I move that box over this area, I'm starting to see how big the box is going to be. In my eyes, this box is going to be just short of 20 pips. Now I can make it bigger. I know I'm going to be in this range. It says if I make it 20 pips, I'm going to cover those candles right there. You see what's happening? It goes up, it breaks outside the box, but you don't get the confirmation candle. It comes back into the box, bounces off here, which we all know that means it bounces off support. Goes back out, breaks out, but you don't have the confirmation candle. Now pay attention to what this is kind of indicating. Right? Let's check the trend. It's a downtrend, right? See that little trend line? If you on 4 hours want to take a trade, wait for this candle to break that line, then go short. The correction will soon be done. Back to 15 minutes. We have an indication that this is going to break out short. You see why? Step, step down, step down. We have a little stop hunt here. This you got to learn how to recognize. That's a stop hunt. If you would have been in this trade for a long position from here, some people would have taken this because they would have seen, some would have interpreted this as a pin bar, some would have said, oh, it's a railroad. It's neither one. But they would have gone long here, then they would have gotten out here, they would have gone short, stayed in the box, go short, they'd be really, really happy. Their stop loss would have been up here, right around here. And then they would have gone back up. Some people would have had this blown out way before that. They would have gone short on this candle, because that's a pin bar. It's not the best pin bar, but it is a pin bar. They would have put the stop loss 10 pips up, which is there. Gone down here, they were really, really happy here, and it goes back up, and then it takes them out. So make sure you see the right sign, meaning don't be so quick in getting in. Step down, step down, step down. And each of these 3 steps here, you didn't have a confirmation candle. Then you had a breakout. Then you had that confirmation candle. Remember, the confirmation candle's got to close before you take the trade. So you would have seen this, you would have gone all the way up here, and you would have said, oh, god damn, I wish I was in that trade. And then it closed here. And you would have thanked your lucky star and said, wow, thank God for that. Goes back in here, it keeps following this trend line, right? This is all a correction. But look at what's happening with this. What do you think is going to happen? Price is going to come back into the box. You already know here that this will eventually go down. You would have known it because you would have checked out the trend. Trend is your friend. Could you have traded this? Absolutely. You see the breakout? Went back into the box. See the breakout? Confirmation candle closed. You would have been here. You would have entered here. 32 pips. On 15 minutes, strive for 15 to 20 pips and get out. And you can learn how to figure out how much you should take, because you can look at history and see how big are the breakout. Let's see this breakout. 42 pips. This is history here. 42 pips. 45 pips. So you could have entered this trade on 15 minutes. Just take your 20 pips and get out. When you start seeing the wicks, start thinking about getting out. This is going to go into the box, then it's going to break through this trend line, and then it's going to go all the way down to, I don't know, GBP, USD. I would say it's going to go down to China, but it's not. It's going to go down though. This is coming back into the box. So you see the reason why I drew this box? It's a consolidation area. The price goes out, comes back in. Goes out, comes back in. This is where you want to draw your box. Does that answer the question? Sarah? I hope it did. Okay, any other questions? So we're going to talk about that. So I just want to make sure we're all good with this box trading. Everyone has enough right now to get started. And I can tell you, this is it. This is what I use. Plus I used reading the candles, right? But this is it. try it, Georgina. You're going to be very surprised how well it's going to work out for you. But try it on a demo account first. And I'm going to show you one thing where I would have gotten caught. See the breakout here? Confirmation candle. I could have gone in on that trade, and I would have put my stop loss 10 pips above. Let's see what 10 pips is. Right around here. This is one trade where I would have gotten nailed. Right around here. If I would have gotten in on this candle, I would have been taken out. Not every trade can go right. Teresa, see, yep. I'm not sitting here saying that I'm taking 100% right trades. Absolutely not. No one does. If someone ever tells you that they have 100% profit, that they have 100% trading success, you should run the other way. Yeah, Charissa, you see what I see. I would have been blown. But here's the other sign. So I'm just going to sidebar for a second, then I'm going to ask your I'm going to answer your question, Fernando, in a second. I just want to show some people here a little trick. I don't know if any one of you have heard about the letter W and M in Forex trading, but you got to try to look for a W and an M formation. And there, on this chart that you see now, you have an M and a W. Alright, so I'm going to draw out the M first, and pardon the poor graphic illustrations, but this is what I got to deal with. I'm going to draw an M, so use your imagination right now. See if you can spot the M. Right? See the M? This M will repeat itself on a lower time frame as well. But when you see an M, it usually means that the market is going to go down. The M gets less stable. Everything gets less stable, or we call it more noisy, the shorter time frame you have. If you see an M on D1, what you want to do is you want to learn how to recognize an M early. And the way when you see something like this, use your imagination right now. Right? First leg, the bottom of the M, the top of the M. This is the formation of the second leg of M. When you see that, go short on the next candle. All in. Throw in your bank account, card, credit card, wife, the whole just load it up. And just go for, I mean, on the higher time frame, on the D1, take your 100 pips. You're guaranteed to take it. Shorter time frames, stick between 15 and 25 pips. So let's see, we would have gotten in here. Bottom was 36 pips. Confirmation and close of trade was at 28 pips. If you're going for 15 pips on 15 minutes, you would have gotten out here. Entry at the formation of the second leg. I hope everyone got that. Now I'm going to show you the W, and some of you might have already seen it. W, like my last name, it's solid. It always goes up. I'm kidding. W, same theory. You see the formation of W? Get in. W means the market goes up. M means the market goes down. So now you all got something to think about beyond boxes. So now you know when someone says, did you see the M or W? That's it. Exactly. Put it all. Just see this W here, right? You could have, some people do is that they use the middle of the letter, which is right there. It's interesting how it kind of repeats itself over here, right? The middle of W is right there, so it's kind of a range right there. That's where they enter when it breaks that level. So let's look at M. When the trade breaks this level, when you start seeing this, if you want to really be good and just play it safe, you can just wait for it to break the bottom of the middle. So right here, you set a trade just 2-3 pips below it, and you enter short. Let's see how much we would have gotten. At max, we would have gotten 17.6 pips. At a bad day, 11 pips. W, we would have entered above the middle, just a few pips, so we would have entered here. And these are sell stop and buy stop, so you set them and then you wait for them to kick in, right? So we would have entered here. Our sale stop would have been below here or there, right? So we would have entered here, 65 pips. So those are little tidbits that you can use. When you see them, try to find yourself a good entry. So that's boxes and letters. You're all set. Go out and make $1 million and send me a couple of dollars. Just kidding. Okay, so anyway, unless there's any questions that's going to pop up, when I answer them, I'll answer them. Okay, I have one question to answer. What's a confirmation candle? So let me answer that, and then we can move into copy trade and all that stuff. Confirmation candle is a candle that confirms the breakout, right? So put that somewhere here. So Fernando, if you look at this candle, this blue candle here, we're going to talk about reversal patterns. So breakout out of the box, that blue broke out. Your biggest mistake at the close of that breakout candle would be to go long, and you can see why. Sure, I can zoom in. So breakout candle here. If you thought that at the end of that candle, because it broke out of the box, you should go long, well, it wouldn't have worked out very well. You would have been happy for, oh, I don't know, 7-8 minutes, and then you would have been very sad for 24 minutes or so. I don't know, a couple of minutes. Breakout, that's a breakout. The next candle got to confirm the breakout, meaning it's got to be the same color, which it isn't. So we have a breakout north, we have a bull candle, we have a long candle, right? But the next candle is a short candle, it's a red candle, right? So it means it's going the other way. So on this breakout, the next candle didn't confirm the breakout. Alright, so you would not have entered. It goes back into the box. It breaks out again here. Now you wait for the next candle. Again, you didn't get a confirmation candle. You should have gotten a blue candle, right? You didn't get that. So you go in. Yeah, hanging man. I didn't want to. So this is a bearish engulfing candle. So there's a hanging man plus hammery. Exactly. You have, once you start recognizing candles, you start seeing a little bit more clear pattern. But breakout, there's not a confirmation candle. Breakout, there's not a confirmation candle. Breakout, this candle here, remember your confirmation candle's got to close, right? See what this candle did? It opened up here. It pushed down here, but closed, and then pushed here and closed here. You wait for the close of that confirmation candle, or enter at the close of that. If you see a move like this that goes into the box and then goes like that and then closes like this, you need to know that you should not enter on that, because what this is a stop hunt for short stops and long stops. You would not have entered on that candle. Now you have a negative candle, meaning you come back into the box. We're sitting here doing nothing. We have a breakout on this candle here. Let's zoom in so we can all see. See how this candle here broke out? See this candle? It's a confirmation candle. You would have entered at the close of that candle, which is right there. We're looking for 15 pips. Did we get it? All the way down to bottom at the spike, 31 pips. Worst case scenario, we got 19 pips. It was a good trade. Why would you get out here? Because this candle had a huge wick and closed as a reversal candle, meaning you had a downtrend, then you got a huge wick and a reversal candle. Reversal candle is the opposite color. That means, whoops, we ran out of strength. What will happen? Probably the opposite move, and it did. And then we went down, and you see the move back up. Now you see the same thing here. Big move up, and it's still close. So you start seeing here a wick. Okay, we're running out of strength, but we got another long candle, and it closed long as well. So we wouldn't gotten out here. Now we get a negative candle, opposite candle, reversal candle. We would have gotten out at the close of that candle, because we have a little wick up and a huge wick down, and it closed along the same move as this wick, meaning there is a lot of strength here. There's very little strength left here. There's a tiny little 0.9 wick. Get out. Get out there. If you entered here, you did good. 74 pips. Why would you have entered here? Because you would have seen this pattern here, right? If you didn't trade boxes, you would have seen this. Down candle, reversal candle, ran out of strength, counter candle, right? Reversal pattern candle. You would have gotten in at the close of that candle. You would have gotten in here, and then you would have gotten out there. 73 pips. I hope that helps explaining confirmation candle. Breakout, make sure the next candle is the same color and doesn't have a huge wick going back into the box and outside the box. If you see that, don't do it. Alright, good. So I think that takes care of all the questions. Alright, so I know Miguel had talked about PAMM accounts and copy traders. So two things that I have. I have something that I'm at the final phase of building, which is copy trader. And what that does is it allows you to install an EA, or actually it's going to end up being an indicator. So you run it as an indicator on your machine, on your MT4. But it doesn't paint or do anything. It only does one thing. It's when I take a trade, it will take the same trade on your MT4. It does require that your MT4 is open and up and running so I can communicate with it. And I do take into account your equity. So if I'm sitting on 100,000 and you're sitting on 1,000, it's not like I'm going to try to open up 100 lots on your account. It's first off impossible, but my trade size will be adjusted to your equity, and everyone now knows that I don't trade more than 3 to 5%. So that's the copy trader. And at the most basic package that I have, so the broker you can use whatever broker you want to. I'm an introducing broker for FinFX. They're in Finland. I sit in the US. I picked FinFX because I've done my research about them. I've talked to them personally, and they are regulated by the Finnish government. I am Swedish originally. I was born in Sweden, so I know how to find my way to Finland if I need to go over there and choke a Finnish guy or two. That's a joke, but it's a really solid broker. They work very well with me. I have no complaints on them. They're really good. I've tried a lot of brokers, and I always do a lot of research about brokers. So if you have a broker you're not sure, you can ask me, and I can tell you whether you should use that broker. Any broker sitting in Cyprus is a very big risk because they don't have certain money requirements. They don't have the requirements to have a separate account to cover all losses. Let's say they had 100 clients and every client went on their ass. They don't have enough capital to cover the losses. They're just not regulated by governments. Cyprus brokers and Cyprus things, I'm very cautious about those guys. There is brokers that does have their headquarters in Cyprus, or at least registered a company in Cyprus, that are trustworthy, but they're far and few between. eToro, I do apologize. It's Miguel calling me. So eToro, that's the biggest amount of shit, and I apologize about the strong language, but I don't have any other word for it. They're absolutely terrible, so don't trade with eToro. And besides, I don't think you can trade with eToro and MT4. But eToro is absolute crap anyway. So, and sorry if you do have that. If you have eToro, you will end up having a fair amount of problems getting your money out. If you start making a little bit of money, you're going to have more and more problems. Yes, it does work with FXCM. It does work with, as long as you can use MetaTrader 4, which is what you see on my screen. As long as you have a broker that allows you to use MT4, you can use any broker in the world that you want to. My trades will come to your trading station and they will open up. When I set my stop loss and my profit, all of those things will be set for you. And at the most basic package, which will start at $29.99, you will have the ability to open up one master trading account and a second trading account. So you could have a live account and a demo account. If you try to put the indicator on another trading station, the trades won't copy over to it, but you could contact me and say, I want it to go to those two trading accounts, and I will disable one and enable the other one. I hope that's clear. So on the most basic package, you get two accounts, and it will go up all the way to $119.99, and that's per month, by the way. At $119, you will be able to copy into 6 accounts at the same time. So when I take a trade, if you have 6 different brokers, the trade will be executed at all 6 brokers at the same time, as long as your trading station is open. You only need one trading station open, so it's important to understand. Eventually, I will have a VPS system, which means it's a virtual system, and everyone, if you have a broker and you like that broker, it will work with FXNet as well. It will work with any broker in the world as long as that broker allows you to manage your trades with MT4. Lost a lot of trains because of the questions, but Maybe they paid me right way because it was only $100. Thanks for it. Yeah, generous. I hope I pronounced your name correctly. Yes, they paid you $100 because $100 is not a whole lot. Also, heads up, any broker that tries to entice you to join them because they're giving you $500 of credit, you get $500 as you join them. If you put $500 in, they give you $500. Now you have $1,000 to trade with. Great. However, those $500 you can never take out. The ones that they gave you, you can never take them out. So Active Trades UK are very good. Great. As I said, you can use any broker you want. So what is my goal when it comes to CopyTrader? And the CopyTrader and my PAMM services, which I haven't talked about yet. My goal is the same. However, as the capital increases, the goal gets tougher and tougher to achieve. I'm going to explain that. The PAMM account, which I will touch lightly right now, won't start trading until the pool is at $10,000, right? And my goal is to do 3% per day. Remember, that's 3%, which compounds every day. So if I do 10,000 and do 3% on that, that's $300 I'm looking to make the first day. That's $10,300. Then I'm going to do 3% on top of that. So my goal is 3% per day. We get up to $500,000, 3% on $500,000. Now it is still very possible, but it's a large amount of money, and I still got to manage my risk. I will never trade beyond 5% in risk capital. So just simply won't. No matter how much people scream and yell at me, take that trade, load the whole pot in, I won't. Because I want to trade for a long while, and I'm sure you guys want to trade for a long while as well. So my risk never exceeds 3 to 5% of the total equity. So the ROI, you can base that ROI on 3% per day. Yeah, could be 75%. You got to figure my win ratio is about 93%. So I'm not trading 100% successfully. And anyone that tells me that they do is full of shit. I'm sorry, but they are. So my target rate is about 93%, so you can figure that. Will I have losing trades? Absolutely, but you will never lose more than 3%. And don't worry, I'll take revenge trades all day long. No, I won't. But even if it's 30% per month, holy crap, yeah, exactly. Stick your money into the bank, you'll get 1.7% in return, maybe at the best. Probably, if you're in Sweden, you'll get 0.7, which means nothing because cost of living and all that stuff increases above 3%, so you're not making money. Put it into an index fund, you'll make about 11%. So yeah. Generous, yes, you could get 14K in return. Now, it's something that's very, very important to understand. If there are days when I will not take a trade because the market is absolutely worthless, and I won't take a trade just because someone wants me to take a trade that day. If the trade isn't there, remember what I said in the beginning. Sit on your hands. Don't take the trade. And I will do the same. So I don't take a trade every day because sometimes the market is so boring, or if there's huge news like there is every first Friday of every month here in the US, we have our labor reports, the FNMC report. I usually try to stay away from that day. I might scalp a little bit, but I scalp very carefully because if there's good numbers, one would think that the market should go up, but it won't because market movers always make it move the other way first to load up on the volume, and then it goes up. So, Carlos, yes, I always use stop loss. However, when I scalp, which will happen, and I'll I'm going to finish off this session by showing a little scalp for you guys. I don't use stop loss, but when I'm scalping, I'm in and out of a trade in a few minutes. Sometimes I'm in and out of a trade in a minute, and sometimes I'm in and out of the trade in 15 minutes. And I don't use a stop loss, but I know what my, if I do a scalp, I usually put my stop loss somewhere between 5 and 10 pips in my head. But I use candles. I look at candles. So just to show you right now, if you see on the chart, on this candle here, I'm going to try to draw it. This candle here, if everyone sees, I'm going to put a line right through it. I would have taken a short trade, and I would have made a trade. Move that line. I would have made the stop loss as big as the candle, which is 6.5. So make 6.5 right around here. So I would have put my stop loss here. I would have gone for 5 to 10 pips. I would have just read the candles. So I would have entered at the top of that candle, and I would have gone down here. That would have been a scalp for me. That's one scalp. I never would have hit my SL, which is only 6.5 pips, but I would have taken roughly, I probably would have gotten out around here, so 30 pips roughly. And when I scalp, I use a larger volume. So if I trade 0.10 normally in long trades, I probably would have gone in with 1 or 2 lots here and taken 30 pips. So when I scalp, sometimes I don't use stop loss, but I'm attending the screen, so I will get out when I see the wrong candle being lit up. So otherwise, if I set a trade and I want it to sit for a little while, there's always a stop loss. Like I said, all my trades, when I've opened all my trades, they will not exceed 3.5, between 3 and 5%. So that's the copy trade. And like I said, you are allowed to trade on, when you run this indicator from me, you're allowed to trade on the trading station. You can take your own trades. You can't just ask me to say, okay, I want 10% profit. Okay, well, I may end up giving you 10%, but you, however, taking a wrong trade constantly, you may give me 40% loss, right? So it's hard for me to give you that in a copy trade. And I'm saying that because I've helped people that come to me that lost $40,000 in 2 days, and they begging me for help. And I actually talked to Miguel about this. I had a guy that lost 40,000 in 2 days. Actually, he lost 34,000 because I told him to get out of Euro USD. His friends wouldn't, and he had $6,000 left. And I said, I will trade you up to 20,000, and then you have to pay for the service. And I traded him up actually to around 15,000, and then he started taking trades that went the opposite way. So I said, the rule was, I'll take you to 20, then you can start trading. You are now trading while I'm trading, and I can't get you to 20 because you constantly take the wrong trade. So that's the problem, right? Scott, so if you put 100 in FinFX account, it will trade off of your available equity no matter what I pick. You're absolutely right. My system, my program will look at your equity and take the right size according to your equity. So I will dictate in my system, I will dictate that I will say 5%, right? So when I take a trade, it will look at your equity, take an appropriate size trade that won't risk more than 5% in your account. Now, if you put $100, you have between $3 to $5 in stop loss. So at 0.01 lots, you have 30 to 50 pip swing. Sierra, I mean, how much? How much for this copy trade? It's a monthly fee. It starts as low as $29, $29.99. Goes up. The most expensive one is going to be $119 a month. Hey Miguel, sorry I couldn't pick up when you called. I'm talking to a bunch of people, and they're more important than you are right now. So, sorry. Alright, so is everyone good with the copy trader? Okay, I hope you're good or family is good, Miguel. If you came back from ER, that's usually not a good sign. So, all right. So now I'm going to talk about PAMM. PAMM account. If you guys don't know what that is, it's when I will manage a large pool of money, but everyone that wants to be part of that pool gets an individual account. However, when I trade with the whole pool, but every trade is adjusted accordingly to your account. Again, like the copy trader. However, in the copy trader, I can't use if I have 1,000 subscriber that puts $1,000 in each, I don't get the combined effort of those 1,000 users. But in a PAMM account, if I have 1,000 people in the PAMM account, I get the combined effect of that money. So that means if I manage $1 million, my trades that I can take 10 lots, and putting my risk at 3%, right? $1 million, 3%, I can allow it to swing $30,000. It's 3% of $1 million. So that's the difference. The PAMM account, and I'm going to answer your question in a minute here, Carlos. The PAMM account, the minimum investment in the PAMM account is $1,000, and you will put it into your own account, which goes under the master account, which is mine. So if there's a certain exit rule in the PAMM account, so if you stick $1,000 and I have opened up a couple of trades, you are not allowed to exit your account or withdraw your money until the trades are all closed out. And you have to give me a written notification of such, and I will stop trading so the trades can close out. And then everyone that submitted an exit interview, one meaning that they want to take the money and leave and go do something else, they will have that opportunity, and it will be announced. But I can't allow people to, in the middle of me having trades, take the money out, because if I'm trading with $1 million, and then all of a sudden, and I'm trading 3%, which is 30,000, right, as my risk. If now a half of the people take $500,000 out, my risk all of a sudden increased enormously. So that wouldn't be good. So there are some rules that will be explained, but and use large numbers, because in a PAMM account it usually ends up being a large amount. The minimum investment again in the PAMM account is $1,000, and I will not start trading the PAMM account until it hits at $10,000, which in this case this new PAMM account will be far above that with the people that I have and people that Miguel have. So that's the difference. The PAMM account, you cannot trade on your own. It's all managed by me and my company, so you can't go outside of, you can't trade on your own. The copy trader, however, allows you to do that. So generous, if you put 20K, yes, I could start trading right away, definitely, but there is a vintage period. So we are announcing this new PAMM account tomorrow and throughout the entire weekend, and then we start saying that people have 1 week to start putting the money in, and after 1 week we will start trading. And the reason why we won't start trading next week is because it's a week filled of holidays here in the US, and it's usually a poor week to start trading. The other is we also need to allow people to put their money in there. So at best, we will start in 1 week from Monday of next week. At worst, until we hit $10,000. And like Miguel said, it's very, very important, and everyone will get a notification about this in regards to the risk associated with Forex, the risk associated with trading in general, and anyone investing money. And I've had a lot of people coming to me here in my group, my Facebook group, and I'm not sure, people are reaching out to me, and I've had college kids and people that are in need of money fast, and that's the wrong thing to do. If you are desperate for money, you don't have money, and you give me your last $1,000 instead of paying your rent, you give me the last $1,000 hoping that I'm going to double it, the chances are very strong that I will, but you are investing money that you cannot afford to lose. So don't invest money that you can't afford to lose. If you are sitting there thinking about writing me your last final check that's going to cover your mortgage, cover your car payment, whatever it's going to cover, don't write that check. Fix your life, fix your bills, fix your commitment, fix all those things that you need to do first, and then come back. If you need money management help and stuff like that, I can give you some advice. I've done investments for an extremely long time, and there's always ways out, but just don't invest money you can't afford. So the question was, how long have I been investing? I have been investing since 2000, pretty much. Actually, my first trade was back in 93, 94. That's when I started trading. And I used a similar way of trading. Back then I lived in Europe, so I used trend lines, and I used a little bit more of indicators back then. It was a different market back then, so but I've been doing it for quite a while. Have I lost money when I started trading? Oh, you bet yourself I have. When I started trading Forex a couple of years ago, I didn't want to hear about demo account. Demo account was for wuss. In with the real money, and boy did that was a learning experience. I wouldn't recommend it to anyone. I started Forex early 2000. I started looking at it. I got associated with someone that wanted me to pay them $25,000 to learn how to invest in Forex. I never did that. I instead just start reading a lot about investments, start in Forex and how it worked and stuff like that, and it's just gone from there. So and as you have all seen now in the last hour and some minutes, it's pretty basic. It's pretty simple if you keep it simple. You can make this really, really extreme, difficult, and hard if you want to. You don't have to. I think I've shown that to you. So that's me. So I think I've answered all the questions. So generals, hopefully I will be able to put in more. Sure. I mean, there's no limit on how much you can put in, but again, you know, put in what you feel comfortable with. Scott, the copy trader, it's in its final phase. We're still kind of finishing off some development on it. We're probably about a week and a half away from it. So in about a week after Thanksgiving, I will announce through Miguel, because Miguel and we work together. So I will announce through Miguel and also in my group about the copy trader. And this weekend there will be updates to my company website, and I don't know if everyone knows my company website, but I took the liberty to bring it up, and it's called My Own Forex Guru. I'm kind of a smart ass, so you get your own Forex Guru, so if you ever wondered. So that's pretty much it. That's copy trader, that's PAMM, and then that's trading. So I want to see if there's any other questions. Otherwise, I'm going to show you a couple really quick scalps for everyone that's dying to go off and do the box and binary, which is Miguel's stuff. I do binary thanks to Miguel. He enticed me, and it just works very well for me. So with my style and everything that I do. So if you have any questions, go ahead and ask me. I'll see it popping up here on the screen. I'm going to flip through some of these pairs. I'm going to try to identify a candle that I want to take a trade on, and I'm going to touch really, really fast on gold. But we've been at this for a little while now, so this recording is extremely long. But anyway, an hour and 50 minutes. I always dream about doing a short live seminar, but it never works. Anyway, I'm going to take a trade or a couple. So I'm going to look for a good candle. See if I can get into a trade here. And so everyone that paid attention throughout this lesson knows I just flipped to H4 to see what's going on. You see, everyone remember the box that I drew around this. Nothing is happening inside of this box yet, so if you trade on 4 hours, when this finally gets out of the box, it's going to be a pretty violent move. My guess is it's going to be up, and I'm saying this because, again, just quickly, remember the stair step, 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 and you can continue painting your step. You see what's happening? So it'll probably be a good move up. So anyway, on 4 hours, but I'm scalping, so back down. Do we have a good candle? Not really. Next pair. Let's see, odd US. Oh, and for anyone trading binary, by the way, when I post my binary trades on Miguel's group, Lucrative Trader, I like trading odd USD at night around 9 p.m. Eastern. It's a pretty predictable pair, and most of you see when I take the trades, I take a couple trades smack after one and then the other really fast. So just a tip, Miguel, you might want to check out odd USD and take the group through trading odd USD because it's a pretty good pair. Yeah, it's fun to trade. Alright, so trying to see what's going on. Small wick up, large wick down, negative candle. It's not a good entry on 4 hours. Let's switch down, see what's going on. We know that the trend is kind of leaning up, so trend change. The good pair is Scott is, I think it was Scott. Was it Scott? No. Georgina. The good pair for binary that I find is really fun is odd USD. Between 8:30 and 11 o'clock at night, it's a really fun pair to trade. For binary, it works really, really well. So I'm drawing a box in 1 minute on odd USD. I'm going to see what's happening here. We have a huge candle up, indecision. We have a breakout. We'll I have 30 seconds left on that candle. I'll come back to that one. We're now at 7:11. Funny. PM Eastern. Asian market has opened up. It's not a good hour right now. Not for another hour. Like 8:30, around 8:30. It's starting to get fun. Let's see what we're looking at here. CAD JPY. Uptrend. Uptrend. Not a good candle. Just trying to find a good candle so I can show you a good trade. Noise. Leave that one mature for a little bit. Let's get back here. So we're 42 seconds left on a confirmation candle. You see this is a blue candle. We had a huge move up. They didn't really sustain a lot of power, but it's outside the box, so it has broken out. We're going to see what happens with this candle. This candle closes above the box. We'll take a long trade on that one. So it's not updating. So something's not. That's noisy. Bearish. Not happy. Long wick. Not good. Let's see what we have here. Just want to show you guys a trade since you guys showed up. So 31 seconds. If in 31 seconds this candle closes below this support, take a trade. Go back here. Alright, so confirmation candle, right? Very, very weak confirmation candle. So I'm going to leave that one alone and wait for another candle. And look at this move right now. It moved in the box. Huge wick. If it closes out like this, chances is that this is going to come back into the box. So we'll wait and see what happens. Continue going through. What pair do we have there? See that candle? Didn't break the support there, so we're not taking that trade. This here is now looking like a consolidation zone, so we can define our box. Let it trade in here, let it break out, and take your trade. So as you can see, I might not be able to take a trade. I'm going to go through a couple more candle chart shift, but we're at 7:14, so it's a really boring time right now. It's kind of Asian market's kind of kicking off. That's not a whole lot. Long wicks up, stronger down. Let's see if the trend is down. It kind of is. This one is gonna start turning down, I believe. Let's see. Yeah, big wick here. We're gonna retest this one and then we're gonna fall. What is this one gonna do? This one is probably gonna drop a little bit, so we can, for giggles, take a couple trades. It's not taking it, so it's a 0.10. Yeah, whatever. Let's load it up. Alright. Remember, we're scalping, so we're just trying to get some quick cash just to. Reason I'm taking that trade, we have huge wicks up, and this candle is a bearish engulfing candle, so we should be okay on that one. We'll see, we have got 1 second. We closed below this. And have a reversal, retest, and then back down again. So we'll let that one sit. Then it'll probably go down to right around here. So what can we get out of that one? 3 pips. We'll see. We'll come back in 36 seconds. What's going on here? So you guys see this? Alright, we had a weak confirmation candle. We waited. We got an indecision candle. We're back into the box. Right? I hope you're all with me. So now you see that. Now you see how this box is working, right? Just because you have a confirmation candle doesn't really mean that you should take it. If you get these kind of candles, and I'm going to zoom in so everyone can understand what I'm talking about. These kind of weak candles, while it's this here, whoops. While this candle here is a confirmation candle, it's not a strong candle, and you know it because it's such a weak candle. It doesn't have a big body. What you want is a big full body. Like if we gotten a candle like this one, I would have gone long, but weak candle, indecision, indecision, back in the box. Here comes the next breakout. Is it going to go north? Yeah. Why? Because we are stepping up the game, right? Now, why is it going to go north? This is a pin bar. Would I take this trade at the close of this candle? Absolutely. I was just not looking at it. This is a pin bar, so really here you can go long. I'm going in at the top of this. I got 1.6 in spread. Not a really great trade, but whatever. It'll go positive. Look at these trades that we took earlier. We're positive, so we're doing good on that. Which one was that? NZ.EJPY. We're good. We hit our target right there. We're starting to see a wick. We want to get out. We're out. We're bouncing right here, right? Why did I go out here? Well, draw yourself a box and then tell me why I got out here. I'm going to draw the box and I'm going to let you guys answer it to yourself why I got out there. Price goes into the box, stays, goes out, comes back in. The price came back into the box, get out. Alright, all USD, let's see how we're getting hammered. Alright, big wick. Not good, but we're still stepping it up. Should be good. We're leaving it for now. So as we get closer to 8 o'clock here, it's going to start getting fun. But how do you set out MT4 to show you live trades there at the bottom? You see trades here. You see the bottom. It says trades. If you don't see it, if you see this, you have nothing. Go into view. And let's see, where is that? Navigator terminal. That's not it. Whoops, sorry. No, I can't get it just for that window. Where is it? Terminal. There it is. Send data in there. Alright, so up, down, up, down, up, down. Is this candle going to close above this? Probably. And then we're gonna, so we continue. We're gonna have a new step somewhere around here, maybe. I don't know, somewhere. Is this a good trade? Shouldn't take it when you're inside the box, but it's a pin bar, so that's why I took it. So, yep, evening doji start. A poor man hanging. He has no clothes, he's butt naked, and he has short skull. He's been poor for a while. He's just dead tired and skinny as hell. So click terminal and my live trades will appear at the bottom. Yep, they should, Fernando. You should see this. When you click terminal, you see this. You should get exposure, account history, news, alerts, mailbox, and so on, and journal. So you should see all your trades there. So anyway, we'll let this baby sit here. It's going to bounce in and out of this box probably for a little while, and then where should I set the stop loss on this baby? Probably right there. How many pips? 2.2 pips. Pay attention to when on 1 minute, if I put it at 2.2 pips, like right there, I got a 1.7 in spread. If I set it for 2.2 pips plus the spread, I'm going to get taken out. So I really need to go down to here, which is the previous low before it came into the box. So I should set my stop loss here. And I can do that, just double click, measure it up, 6.5. So we'll do 8, and we take 15 pips in profit. Should reverse that, otherwise. 15 pips in profit. Boom, boom, boom. There's my stop loss. I'm going to move it down to here where I want it. My profit is, switch up to 5 minutes. My profit is up here. That is too high. We got candle wicks here. I'm going to adjust it a little bit. We'll take it down to here and we'll get out there. Back to 1 minute. Okay. It shows red color because of the spread. I'm close. I'm within 10 pips of my stop loss. And it shows green colors when I'm within 10 pips of my take profit. Generous. If it closes like that, it is good. It is PAMM. Yep. Alright, Fernando, you're good. Terminal. Good. Any other questions? I don't think there are right now. So we'll just wait and see what happens with that one. You can see that there is resistance, absolutely. Let's see. Getting down to the bottom. Oh, come on. You can see there is resistance in the bottom. Generous, I'm going to correct you a little bit with all due respect. When the price move comes from above and hitting the bottom, it's support. When the price moves come from the bottom and goes up and turns, it's resistance. So, don't mean to call you out, but not a problem. I just want to make sure. Alright, do you see that step that I put in, the last step that I put in on the red candle? Do you see that? I'm not too far off, am I, right? Half a pip or something. So it wasn't too bad of a estimate. We're still climbing, so we'll leave that baby sitting and we'll see what happens. We see a lot of strength here, right? But that's also a sign that eventually the strength will turn the other way around and go down. Now you can change this way of watching this. If you make this box bigger, you can have a step down, top, top, top. So we could break out the other way. I am never moving my stop loss once I set it. Once I set it, I leave it. If I'm meant to take this loss, I'm meant to take it. That's just how it is. I don't believe in sitting and adjusting your stop loss when it goes against you and you start moving your stop loss. You're just going to continue moving it until you're so badly damaged that you're going to wish you never moved it in the beginning. Generous, yeah, reversal patterns. You're right. It's the market just opened up. They're going to try to define. You see this line here? That's right at the shift. So that's Asian market. They're going to set the pace. So Fernando, why I'm not using lucrative templates? Like I said, I read candles, and so the indicators are lagging. So the signal comes, especially when I'm scalping, the signal comes a little bit too late for me. There's nothing wrong with the template that Miguel has put out and the indicators that he's given everyone. There's nothing wrong with it. Can you boost trade on it? Absolutely you can. But you got to use the strategy that Miguel is teaching you guys, because he's teaching it from the perspective of using indicators where they are lagging, right? So I'm using candle action, right? So I'm trading based on what I see the candle doing. If I were using an indicator right now, I would get probably burned. I wouldn't take 6 consecutive trades like I did. So when you see my trading results for binary, and I do boost trading, this is what I do. I do my box, I wait for the signal, and I bang out anything between 5 and 10 trades. So when you look at the template that Miguel has provided you guys, you gotta use his strategy, because he's really taken into account that the methodology of indicators. Georgina, what you're looking at right now is 1 minute trades. So everything happens in 1 minute. So when I do boost trading, it's in 1 minute, and I take just a bunch of trades. There's something called a martingale trading system, which always trades on the philosophy that eventually, if you keep taking the wrong trade, but you double up every time, so if you put $5 and then you do $10 and then you do $20, eventually that one trade that goes right will undo all the wrong. But I actually have a guy in Denmark that trades that way, and he actually managed over $1 million, and that's his straight. He does trade channel, but he kind of uses a martingale strategy. So he just doubles up on his trade. If he says that he's going to trade short, he'll continue trading short until that one doubled up trade hits, and he'll make, maybe in a month, he'll take in $100,000. So why did I do back-to-back trade on same pair instead of just increasing your volume? It's just, I just wanted to click away and do a couple quick trades. Otherwise I would sit here and do one trade at 0.10, one trade at 0.15, next trade at 0.20, next at 0.25, and so on. Just to show you, when I scalp, I'll just boost away a couple of trades, 5 to 10 trades in the way that I think they're going to go. So Generis, you might know him. He's a Danish guy, so he doesn't use boiling bands. He draws his channel. I don't want to confuse everyone, but you can trade channel. You can use where is it? Where do I have it? I don't have it added here. See if I have it. Well, I don't have it here. You can draw channels. I guess I can use this one. Just move it in here. So you could trade within a channel. So if I define my channel to be here, and the reason why I do that is because I have a top here and I have a bottom here. So this is my channel. This is my channel trading. Once I break my channel, I kind of exit out of all the trades I took here and whatever, maybe here. I'm exiting out. I'm breaking my channel. Now I have to wait and see where the channel is going to go. So that's kind of a channel trading. That's one way of doing channel trades. So I'm going to let these 3 trades sit and see what happens. Either they take SL or they take profit. Right now, you saw it broke out on the bottom here of the box, and then came back into the box. We didn't have a confirmation candle. So you see this is ranging, and now you understand why I use boxes, right? A lot of traders would be trading without box, and they would be in and they would go long just to get their ass handed to them the other way, and then they will go short, and then they will go long, and they might as well get their ass on a silver platter. So use boxes. It helps you. You see this range trading, right? Up and down, up and down, up and down. A breakout is coming. But now we've had a breakout on the top and a breakout on the bottom. Right now, I'm going to give you my honest opinion. I think the breakout is going to be down, so I'm going to take a hit on this baby, and I'm saying that because I have these huge wicks here. I took a trade in this box because of this candle here, which is a pin bar. As soon as you saw the close of this, you should go in. The problem is I'm trading on 1 minute and I didn't look at the spread, and my spread is 1.5. If it would have been 0.5, I would have been fine because I would have gone in here, gone out here. 3 pips, I would have been happy as a cat. Now I'm just gonna let this baby sit, and they all can do whatever it wants to do. So yeah, journalists, martingales are I don't like martingales either, because usually you run a DD. Again, what I said in the beginning, DD is a drawdown. That means your trades are going negative. You usually run a DD of 90%, even up to 93, 97%. That means you only got 3% left of your equity. You better be praying that this shit goes right. And that's just absolutely the wrong way to trade. You're risking more than 3 to 5%. You know, it's going to be one of those days when it doesn't go. And imagine sitting there blowing 93% of $1 million. That's just insane. So I've seen this guy. He, like I said, he managed over $1 million. I've seen him be negative $300,000. So it really does take some strong nerves to do that, and I think it's an insane way of trading. So I agree with you, Jenner. It's just not a smart way to do it. It's just, you can read about martingales, just don't do it. That's my recommendation. If you now go off and do it, when you get your ass handed to you, I'm sorry, but you had it coming. So do the box trading. You'll be just fine. Pay attention to the candles. When you start seeing long wicks, the chances are that the action is going to start moving the other way. And when you're on a minute, the box is going to help you and give you save you a lot of headache. As you can see, we're trading in a range. We have a spread of 1.5 pips. Our box is 4.4 pips, right? So 1 minute boxes around 4 to 5 pips. Don't make them less than 4 pips. You're going to save you a lot of headache, like I said. So we're starting to see again the move here. We're starting to see an edge coming to fruition, meaning the juice is running out. So a move is about to happen. So we'll leave this baby sitting. We'll see. We're not doing too bad. We're $1.20 negative on each one, so we might have a short breakout north here. So there it is. We're positive. We'll wait for the candle to close out and see if we're good here. If I were at 0.5 in spread or 0.1 in spread, almost nothing, I would have loaded up another 5 positions if I get a confirmation candle. But right now I'm just gonna wait for that candle to close out and see if I can take the money. And what it's doing right now is, you see, it's testing the previous resistance. So we can pull a line here. So if it breaks outside that, we have a good move. So 3 seconds left. If it stays strong, that's a strong candle. Now we just need a confirmation candle. You can load in the wallet, throw in the bathtub, for crying out loud. So I hope you all see what benefit the box trading is. Look at that. Alright, so we're scalping. So if this would have been 10 lots, we would have been $180 on just 1.8 pips. Remember that, right? $180 per pip, per trade. Just put 1.8 pips. You see where I'm going with this? You don't need to have 300 pips to make money in this game. Okay, so I'm about to close these out. I'm just gonna end the session. This baby is gonna go somewhere. This is a very long recording. Hang on, let's take the money. Okay, so our trade for today, we took 1, 2, 3, 4, 5, 6, 7 trades. They all closed in profit. We didn't make a boatload of money. It's not going to cover a beer here, but just to show you guys that box trading works. So, and I'm about to wrap this up. Any questions? You're welcome. It is my pleasure. I am going to make this recording available. I'm going to upload it on YouTube. It's going to take forever because it's a long recording. It's 2 hours and 20 minutes. But if you have friends joining and stuff like that, tell them to suffer through the 2 hours and 20 minutes if you think it's worth it. I do believe it's worth it. Look, we could have taken more money. Anyway, take your trade, set your trade, make the money. That's what I want to kind of finish this off with, is once you set the trade and you set your stop loss and the take profit, that one you could adjust. But once you set the trade, it's like that old saying they had on this infomercial, set it and forget it, right? Set it and don't change it. That's my point. You set a trade and you set the stop loss. Do never move the stop loss. If you take a loss, go back in and find out why you took that loss. Study it. Learn from that loss and then do a new trade. Alright? If you don't learn from your losses, or if you don't even go back and study them, then you will never improve. So that's my final wisdom guru message. So alright, Miguel, I don't know if you're still with us. If you're, say hey, hidey ho, and I can give you the microphone if you want to. Giving Miguel a second to speak up before we end this. Okay, I think Miguel is in doing binary trading right now, so we're going to leave him alone. Oh, there he is. Alright, so thank you everyone for showing up. It's my pleasure, and got any questions, just talk to Miguel or talk to me, and have a great night.